far, like, how do I manage my time? How do I know how to start this journey and create a plan for the first month, week, month, year of trading? So I'll go over it month by month, sort of give you some suggestions and hopefully some food for thought. So I said, especially if in your first year, if it's useful, I would suggest if you've been trading for less than 3 years, you probably find some value in it. So hopefully you'll join us tonight at 8 o'clock. That's in the Success Webinar room. And
MYSZ, my size, spiking here, $1.27. Michael Yankee, Sandy Zulu.
How everything is going.
I was going to do it again later, but it was on my mind, so I thought I'd just mention it.
Yeah, might as well. So, question, Peter.
Good afternoon, guys.
Skype muted?
I should, yes. Let me just check. Hold on. I've muted my microphone in Skype. I haven't muted Skype, but I can't hear it. So,
can you try to mute Skype? Because I'm getting an echo again. Let me see if YouTube's getting an echo. If it's just me, I can deal with it.
I don't know how you mute Skype, but I think I've done it. And this afternoon, we are having the esteemed, the one and the only, the fabulous, the miraculous Dr. Jonathan Katz, who will be joining us at some point. Hopefully he doesn't hear this. I wouldn't want his ego to get too swollen. But
yes, I am hearing it.
Oh, darn it.
I am hearing it.
He's there. He's hiding in the background again.
Flattery will get you everywhere, Peter.
Yeah, well, I keep trying. So,
yeah.
So yes, Dr. Katz is here. So guys, as always, in the room, if you've got questions, feel free to ask them. Just put them into the main chat, and we will make sure Dr. Katz has the opportunity to answer them. Mexi, to your question, yes, it's 8 o'clock market time, so that's Eastern time, meaning that's about 4.5 hours from right now. So, Dr. Katz, how are you doing today?
I am doing okay, Peter. And you guys?
Excellent.
Excellent.
I'm doing great, thank you.
That's good to hear.
Great.
I heard your little dialogue about teachers. I come from a family of teachers as well, and educators. So
there you go. It is quite. My mother was a lifelong teacher, and in fact, some of the charities I work with, in fact, one I've got a board meeting tonight for, but School Box, where we build schools for underprivileged children in Nicaragua, and I got involved sort of in her honor when she passed away. Well, it was a little bit before that, but yeah. So teaching and mental health are the two areas that I tend to volunteer most of my time in. But yes, I do think that teaching is an underrated profession, and definitely underpaid. It's probably the most important thing one of the most important things we can do for our children. And frankly, if you just want to be selfish, the future of our economy and our countries, and yet we short shrift it all the time. But anyways,
yes.
Enough of my rant.
The interesting thing about it is I think a lot of people that are working from home and trying to take care of their children now see the benefit in teachers.
There's been a little bit of a realization, eh? Well, as my mom used to say, teaching is sort of like banking, right? Because everybody, if you're a parent, every parent deals with teachers. And everybody deals with banks. Anyway, her point was that everybody thinks they can do it because they interact with them all the time without actually having tried to do it. So, now, as you say, Mike, so many parents have had the lovely experience of trying to teach their little angels. They realize that it can be a little it can be a little difficult. Yeah, well, it's interesting, Mike, isn't it? How like entertainers and sports figures, how we pay them so much, and yet those on whom we rely to maintain and build our society, we sort of put at the bottom of the spectrum. Whoops.
Yes.
It's the same way. Like, I mean, I took benefit of being a senior executive at a company, but when I looked and said I am making 5 times the average the average salary of the technical people on whom I rely to actually deliver the services and these things I'm committing to our clients, like it made no sense.
I agree with you. It is very different.
So
And an interesting thing on entertainers and athletes, many athletes would long to be entertainers, and many entertainers long to be athletes. So there's a mutual longing there.
there you go. There's that too. We'll get to some questions here, Dr. Cat. No, you're asking what I dropped. It wasn't my whiskey glass because remember, I'm not drinking for 30 days. We've got our new diet plan going. I use this as a reminder of folly. So this is unfortunately a piece of the aluminum rim off the back wheel of my Porsche. I didn't wear my glasses one day, and I actually was. And let me turn off. We have to turn off Benzinga. We just have too many things here. But anyways, ran into a curb and broke the rim of my car. It's quite upsetting. So that's.
I like the humble brag on the Porsche thing. Now you're going to tell us the Jaguar's in the shop, which is why you had to drive the Porsche.
Everybody here knows I've got a Porsche. I've been talking about it for a long time, but it's anyways. Yeah. So yeah, it's unfortunate. So that's a $3,000 mistake right there to get some, but oh well, that's the way life goes. I'll be clear that I've yes, and I do, Mark. I have not a $10,000 suit, but I do have a $5,000 suit. I've got about $50,000 worth of suits sitting upstairs that thankfully I haven't had to wear in a couple of years. But the Porsche did not come from trading; it came from my old life.
You did wear one of them.
Yeah, well,
I have.
Yeah, well, that's true. That's a good point. I did wear the top of my tux. Yes. So, thank you for that reminder. Yes. Yeah, classic day. Classic day. All right, let's get to some questions. Enough about me. Let's talk more about me. Jailu's got a question here. I'm not sure if I'm saying that properly. Jailu. Anyways, hopefully I'm not butchering it too much. When I'm up a lot, I can hold into my position and play technicals when the trade is green. However, when I'm down, I get nervous on my trade and tend to take profits early to cover my loss. You wouldn't be taking profits if you're down on the trade. But anyways, I think the problem is you're not managing your trades as mature as you'd like, especially when they're going against you. How can you best deal with this mentality?
You mean the question is really you have a stop loss, but you don't let it hit that stop loss before you get out? Is that kind of what I'm getting at, Peter? Is that the question?
We'll let Jailu answer that, but I believe so. So instead of sticking to the plan, they're able to stick to the plan when they're green and it's going well, but when it starts to go against them, they start to break the plan because they get nervous about losing money despite what their plan said to do.
Well, part of the first step is, I think, doing an honest assessment of whether you are actually risking the capital that you can afford to lose. So the first stuff is, kind of really a financial, or are you putting yourself out there too much financially where it's causing you too much stress? Because then that's going to lead to you being difficult to be disciplined to, like Peter said, to kind of follow through on your plan. So that would be the first step. The other is, I think, then there's just some kind of, off-market time visualization kinds of mental rehearsal exercises that you could do when you have a disciplined plan of just kind of seeing yourself in those situations and allowing your trade to, if need be, unfortunately, but hit its stop loss, kind of having conviction in what you're doing and setting a reasonable stop loss at a at a level risk reward wise that is worthwhile, but also that you're not risking more capital than you actually can feel comfortable risking.
Yeah. Jayu also helped clarify that it's often when they're on a red day, even on the green trades, then they get eager to start trying to, make up for the red day by taking early profits instead of just letting a good trade run its course. But I think
yeah, well, this gets to the whole process versus outcome. When you start looking down the road at how you want the day to end, as opposed to just individually looking at the quality of the trade that you're involved in, if you can just focus on the process of that and how to best trade what's in front of you, you increase the likelihood of a better outcome for that individual trade, and the outcome of the whole day will be the culmination of multiple decisions like that. So again, this is a struggle for most traders, is the whole process outcome oriented thing. And the more you can stay in the moment with what trade you're looking at, the better off you'll be.
I'm going to take a partial on Microsoft. Yeah, and I find I fall into that same trap as well. All right. I got so many conversations going on. I'm trying to figure out where I'm at. We're talking about
I agree.
prison.
My wife
prison.
walked in and I was having a conversation with her, and
OTC, interesting. He says, I have the opposite issue with vegan. Does the concept you define go both ways? I'm not sure what that refers to. Hold on a sec. Going back. All right, guys, if I may have lost your questions. We had such a great series of conversations going on here. Let's go down to the last question I see here. That says from Rafa at 3:39. I've realized I'm not a fast thinker. I resemble that remark. I am good with the trade and long strategy during the day. Should I continue trading on and think faster, or stick to my strengths?
Well, listen, there's nothing wrong with sticking to your strengths, but if you want to kind of widen the net and increase your trading game, one of the things is on more short-term trades that necessitate you thinking faster is just to kind of go into those with very small size and little risk, so that you're not getting caught up in the emotional volatility associated with big financial losses or gains. It's kind of just a way, a little advanced from sim, of testing yourself on trades that historically have been a little more difficult for you. Whereas the swing trading, you probably feel a little more freedom and liberation to get in at bigger risk and bigger size. So that's how I would approach it. I think it's always advantageous to, on one hand, yes, recognize where your strengths lie, but there's no downside to trying to work on areas that are a little more difficult, but you want to do it in a prudent way where it's not too costly financially or emotionally.
yeah. Did you answer the question from Mike H? He had a good one.
Sorry.
I got it, Peter. So Mike H asked Dr. Katz if he's having a hard time to get to any size above $25 risk per trade. Is there anything you can do to help him out?
Well, hard, it sounds like, meaning forcing himself to do that. One of the things that I, for people to do that is just to really gradually and slowly and incrementally just up the size of, how much money you're putting at risk per trade, but do it in such a small way that, you're not questioning it each time. It's hard in those situations if you're going to make a decision in the moment, because emotion takes over, and generally we go down towards the path of least resistance and do what we have been doing because that's in our comfort level. So unless you actually have a mental and kind of trading plan to increase it 25 to 30, whatever it is, you're going to probably exit stage left, so to speak, and just go back to what you were doing before. So I would suggest that you come up with a reasonable and small incremental increase You kind of plan for that, and in your pre-trading day mental routine, kind of ready yourself for maybe a little more financial, perhaps, and emotional volatility associated with that increase, but it's small enough so that it should not disrupt the apple cart, so to speak. And then kind of try to stick to that and don't waver, because if you regress and you go back to the old one, it really undermines not only the trading plan, but your confidence and ability to stay disciplined to something that you would like to improve upon.
Excellent. We got a good question here on YouTube, actually, from Mark. He says his problem is when the stock starts to dip, he starts buying the dips when the trade's going against him. So basically averaging down into a losing trade. And then the stock never ends up coming back, and eventually he ends up taking a heavy loss in there. What are some things if you got a problem with averaging down and averaging in?
Well, I think it gets back to the quality of the trade and your conviction level. If you think a trade is going from 10 to 15 and then goes down, you get in, your entry point is 10 and it goes down to 8 and you're still conviction level, nothing has shifted, then there's no problem with doing that. But if you get into a trade where your conviction level is not that high, and or something significantly has changed, news, technically, whatever, on the trade, then just because it's a better price doesn't mean it's a better trade. So I think this is where you got to start with what your trade, what's the pattern of your trading decisions? Are you making good trading decisions? Are you only getting into trades where you have a good conviction level and a good, hit rate? Because that's going to really, just because a price goes down and it is a better deal on a lousy trade is not going to gain you anything. So that's kind of where I would start in that.
If I could add to that, because I fell into that trap for a long time, and agree with everything that Dr. Katz said, but I'd also say that the thing that you should absolutely pay attention to is your max loss on the trade. It should be your max loss on the trade, period. So if you're adding into it, that means your loss point has got to move up. If you're already past your max loss, you can't add into it. You should be out. Get out immediately. You could re-enter in time. If you think there's another trade and you can make that money back, but your judgment is impaired severely when you go past your max loss. At least I know in my case, in the case of many whom I've spoken with, you're not always thinking straight at that point. The best thing you can do, as painful as it is, if you're at your max loss, get out of the trade. Don't add to it. Don't try and recover it and say, well, if I add to it, then it only has to go up half as much and I'm back to break even. It's faulty thinking, right? Get out of it, reassess. If it makes sense, then maybe you re-enter. Don't keep doing that, because that's a sure recipe to just keep losing a lot more money than you had ever planned.
Yeah. Right, and as Peter said, if you continue to do that, actually it undermines, again, your discipline and a trading plan, because basically what you're saying is I'm making rules for myself, but I'm not following them. And that is a very dangerous thing in the long run for any trader.
Correct.
Yeah. Stop loss is a must. When it hits your stop, you got to get out at that point. Whenever it goes past that stop, you're no longer trading a plan. You're just gambling and hoping and wishing and praying that the stock goes back in your direction. And more times than not, it's going to be a bigger pain on you and painful loss than it will ever be when it does go in your direction and you recover your losses. It's just a very bad habit to start or even
and let me say, a lot of people get seduced when they do that, and then the trade shifts. They blow past their stop loss, it reverses and goes in their direction, and then somehow they feel justified in having done that. And that is a short-term gain that could give people a false sense of confidence, because basically, if as Peter and Mike will tell you, sticking to rules and being disciplined are key factors here. And just because the trade works out because you were not disciplined, there's a cumulative impact of not following a plan that is going to be far more costly kind of psychologically and just strictly P&L performance wise in the long run. So please, if that happens, don't delude yourself. I mean, you should be self-critical. If you've done that, yeah, you got away with one, but you got to look long and hard at what went on and not repeat that kind of poor pattern.
Yeah. Anne's got a question here. I'm not sure if it was directed towards Peter or me, but I'm interested to hear your thoughts, Dr. Katz, on it. Say you've already been live and you're working on adding a new strategy into it. How long should you practice in sim before going live again with it?
I don't think there's kind of an easy answer for that. I would like to think that you should feel like there's a certain kind of reasonable positive hit rate, that you're making good trading decisions, even on sim, that these trades are working for you. I guess people have different levels of comfort that they need to have before they kind of put real dollars at play. And that's a very individual, personal. Some people tend to be a little more conservative and cautious, conservative financially and cautious in terms of their personality style. Some people are more risk takers and kind of feel like, I'm ready to kind of get out there and do it live. And the only thing and that's fine. There's no right or wrong answer here. But what I would say is, because when you start trading real money, the emotions come in a way that's not the case on sim, that I would strongly encourage you, regardless of your confidence level going live, is to really go with small dollars at play, because that is more likely to help you continue to maintain your plan that you have kind of start to establish. And it is less likely to have the emotional volatility associated with the financial volatility kind of impact your trading decisions. So I think that should be the key factor. Comfort level. You're never going to be totally comfortable, so you want to feel like there's some objective measure that you have to make that move. But I would start very small, dollar-wise, risk-wise.
Microsoft, I own you.
Are you? Peter's trading Microsoft again.
I've got like a 95% hit rate on Microsoft into the close here. It's going well. Anyways.
Here's a good one, because this is something that I'm kind of dealing with this new strategy that I've been playing with. Duke Trades here says, I have a habit of having his stop loss quite far away from his trade. So his target is quite hard to reach. What's the solution?
You mean, is the question that his target is far away from his entry, as well as his stop loss is far away from the entry as well?
Yeah, that's what I think he's saying, because I think he's putting his stop loss low for added confidence.
I think part of that is you need the risk reward. Can you afford to lose where that stop loss is? And is it turning out to be reasonable in terms of your trading? Meaning, is your target like a reasonable target? Are most of your trades hitting your target? Are you getting out of those trades too early? I think this is where the journaling and the reviewing is important. It's not necessarily too wide. I mean, if it's not problematic for you, if you feel like you're losing too much on the downside, or on the upside, that your target is too high and the trade fizzles out 70% of the way there and you're letting it run, then I think you need to assess whether you're being overly optimistic on the upside and whether you're risking too much on the downside. What's your guys' experience kind of with that situation?
Well, for my side, I would say there's a there's a big technical component to this, right? If you're setting your stop loss so far away, the first thing you need to do, I guess, is that a reasonable technical stop, or are you doing that because you're nervous about getting stopped out? To me, those are very different things. So if it's a reasonable technical stop, then you need to take a look at, so what does that require you to, achieve to hit your profit target? And if it's not a good trade, maybe you shouldn't be taking that trade. I'm guessing because of the nature of your question that you're asking the doctor is that, you're thinking it's more of a psychological, you're doing it to make yourself comfortable. If I put that stop so far away, there's less of a likelihood that I'm going to get stopped out, right? And if that's the case, then then it's then I'd go back to what Dr. Katz said. I don't have a better answer than that, quite frankly. But I would say first, you've got to assess: is this a technical problem, or is this a psychological problem that you're trying to manage?
And they might be interconnected too. Sometimes the two are at play. Yeah, which is important to assess.
Good point. I mean, of course, yeah, they're never just completely in.
Yeah.
What's primarily driving your decision, I think, is, I guess, what I'm trying to say.
Yeah.
It's so, like I was talking a little bit earlier today, is that I'm setting a technical loss, but with the strategy that I'm break of high of day and the movement that's going up, I'm finding that I'm getting out of the trade much earlier than my stop loss, but I'm afraid to move my stop loss up to typically where I am exiting, because it's not a technical level, it's more of a volume and price action type of exit. So what I am doing is I'm actually testing out and seeing, if I increase my risk, what's the impact on my emotional state with how I can handle the trade, knowing that more than likely I'm going to stop out way before my stop loss. So I'm interested to see the results of it.
Yeah.
So we got about 4 minutes or so going in. Peter, are you still in that trade?
No, I got stopped out of Microsoft on that big push up, so I got a couple of good partials, and then it stopped me out. So.
Awesome. So, Dr. Katz, we'll end with this last question. I thought I had it up here. Did it go down? From Omar. How do you manage your emotions when you have a long winning streak? So he's doing the boom and bust. He's having a long winning streak, getting rid of his profits in a day, and then repeating the cycle all over again.
So, Omar, generally what happens in those situations is, as things are going well, this is often an unconscious, very subtle process that takes hold, is that your confidence builds with winning trades, which is a good thing. But sometimes unconsciously, one gets a little overconfident, a little complacent, a little loose with their process. And that loosening means, I'm not saying consciously you're thinking, okay, whatever trade I throw against the wall is going to stick. But it's a little bit like if you vision a basketball player hitting, 5 3-pointers in a row. Sometimes you go down, you see the next shot from 38 feet. They're just chucking it up, thinking like anything they throw up is going to go in. And the very fact that they made those 5 shots is because they were probably disciplined in taking good shots where they were open and they were comfortable and set. But now when they've gotten overconfident, it's just feeling like as soon as they touch the ball, they just chuck it up and it's going to go in. So what I would look at is, and again, this is mentally something that you should prepare for, that be very mindful that as you make a bunch of successful trades, just take stock and take note of your discipline and your plan. I know it sounds counterintuitive, but almost you have to be more vigilant on your trading decisions for you as you have successful trades, because the pattern is that on some level you're loosening that up and you get so maybe unconsciously full of yourself, you get into these big trades, a lot of risk, big size perhaps, and then all of a sudden the profits from the previous 7 or 8 trades that you've made kind of go out the window. So actually, as you become more successful, be a little more vigilant about your trading process, and kind of make sure that you're continuing to adhere to all of your plan and your rules as that winning streak moves along.
Awesome. Dr. Katz? thank you for joining us this Wednesday, and I hope you
Okay.
have safe travels on your
Okay, very good,
vacation.
guys. Nice being with you, and I'll see you a week from tomorrow.
Thank you,
Yep,
sir. Take
thank
care.
you.
Okay.
Thank you, Dr.
So,
Katz.
Hey, it's Brian.
uh-oh, where'd
Hey,
it go? Where'd it go?
I was lurking in the back, listening to Dr. Katz. Good advice. Watching
Thought I,
Peter trade Microsoft just one more time.
thought I heard heavy breathing
Yeah.
back there.
He was there going.
I was
So,
always
Brian, a
there.
question that we have on YouTube, maybe you heard something about it. Um, was there anything that changed in the last hour on the market and why it all of a sudden started popping up?
Not that I'm aware of. No, I'm not watching CNBC or anything like that, but I don't know why the market has done this little pop into the last hour of the trading day. We're getting back up to this previous day high.
The market and certain stocks have made some weird moves today that I can't trace back to any news article. Like, well, there's the bell to close us out.
There
But
is the bell.
like earlier today, Brian, I'm not sure if you're watching. Look at both Neo and Tesla. They both started to tank at about the same time, and Tesla, pulled down by almost $100. Um, and I could see no reason for it. But Neo was moving at the same time, so it felt like it was an industry-related issue. But there was no news that I could find on it.
Yeah, I think there's just some on the these electric EV stocks. It's just I think there was just some at some point people just started taking some profits, and the marginal buyer that was out there was at this high a price was just overwhelmed with profit taking. So I think the way I read it, that price action is just profit taking. I'm just looking here, sort of 45 minutes before the close. The Fed's Bullard says he's pretty optimistic on outlook, despite the resurgence of COVID. But that I don't know if there was a statement that came out before he made those comments.
Yeah, I didn't hear anything on
So U.S. there was
Benzing up.
a note on May consumer credit decreased in the U.S. So yeah. Anyway, yeah. I guess that's all I can find. Maybe there was something about this consumer credit thing, and then the comment that Bullard made about the being optimistic on the economic outlook. So, which kind of fed into it.
Yeah.
Other than
So-
that, I can't really see anything. But there's this, as you're noting, it's just everything's. There's just been a number of stocks that have really just been dragging us higher here. Square, Tesla. You know all the names, Bob, of the recent one.
Yeah.
Hmm.
Well, especially being a quarter ago, they were talking about their online sales. We'll see if that actually yielded any positive financial results. So yeah, Bed Bath & Beyond might be interesting. I don't know what to expect trading-wise, but usually after hours, it's not a big mover. But tomorrow morning, in fact, I'm writing it down right now onto my list so that I've got it to watch. Mm.
Walgreens boots.
Yeah,
Boots.
well, That's that usually sucks to trade, but what's going on?
Yeah.
Oh.
Well, you're in the stream. Yeah,
I
it's
might.
your lovely face.
Send me.
Your
Hey,
lovely face. There's my big
I'm,
face. We'll put it over you.
I might be a BBT on Twitter. I want you.
Yeah.
Here we go, Peter. I'm
No,
hiding you.
Careful.
BBT.
Careful.
There you go. You're no longer allowed to be.
Darn
No
it.
longer allowed to be Mike BBT.
So, but that's what earnings we have. Thankfully, tomorrow we'll have some better, or next week we should have some good earnings with the banks reporting finally. So, and then the members trade, because I don't ever want to get out of here without putting the members trade of the day up here. It actually came from Andrew from New Jersey. If it populates up here.
Normie, BBT on deck, baby.
Yep. So as you can see, he got in early on AYRO, took some partials, added back in, took some more partials, all out around 7:15, and then tried it again. What I really like about this is that he knew that he was being greedy. Took the partial, got the bad fill, and then just decided to get out of the trade once he knew that he wasn't trading properly. So good job to Andrew from New Jersey. It's out there.
No, it's New Jersey.
Sorry. I don't have the Northeastern accent.
Yeah.
And then
Jersey.
for our moderator trades, I pulled some trades off of Twitter that they posted. Here we got Carlos, who traded INO, and I got that right. INO, as you can see, he was looking for a VWAP and a drop back to the low of the day. Price action was not able to stay above VWAP, so he shorted it, got stopped out of the trade. So he put that on there, but the other trade that he did in there, he also had SQ, and as we all know, SQ was a big one. And then for anybody that was not in the chat room, this is Thor's trade on Twitter today on the breaking news. He walked everybody through it. That entry, he wasn't necessarily chasing it. As we all know, Thor reads level 2 outstanding, and it was a pullback with some heavy volume coming in, so Thor decided to jump in, took some partials, added back in, as you can see up there around that 35 level again, as he does so eloquently, and profited out for the day. And then last but not least, of course, we got Peter and his Microsoft trade today as well. So,
Vita.
yeah.
Yeah, I did it again. I was saying that Microsoft has really been treating me well into the closes. I think there was only that one. I think there's 2 days I can remember where I had small losses on it, but I mean, almost everything has worked. Knock on wood. Now I've jinxed it, but it's really been going quite well. I just so now I can't help it. Like now I'm just keeping an eye on Microsoft because I've got
Just
confidence.
Yep. Got
Yeah,
the
Just keeps,
confidence.
Well, why not?
keeps working.
If it makes me money.
That is good.
Just
So,
keep doing
and
it.
then we'll finish up with the community announcements for the day. I know, Peter, you.
We could do it again, though. Just quickly, though, we are doing success webinars. We do most Wednesday night. It's back at its usual time at 8 p.m. So hopefully you'll join me at 8 p.m. for my success webinar on setting up a training plan. So as I've said, it's best probably for anybody who's in their first year of trading, but if you're in your first couple of years, I'm sure you'll find some gems of knowledge in it, at least so I hope. And really, we're going to go over how should you manage your time? How do you, what should you do the first month, the third month, the 6th month, a year in? And I'll outline that so that you've got an idea of a plan that you can put together. So hopefully you'll join me at 8 o'clock for that. And then next week, Jared is going to be leading one where he's going to be identifying and maximizing trend days. So we talk about trend days a lot. Today was a good example on some, like SQ, for example, or maybe Facebook. How do you take advantage of those trends so you can sort of maximize those big long trades that you could take all day? I rarely get those, so I'm very interested in this seminar because when I do, they feel fantastic. Because really, you get an entry early in the day and then you just let it run. I'd like to do more of those, so that'll be very interesting to see Jared's take on it. And it said, from these, you always get little nuggets of knowledge. You can add it to your sort of your own personal catalog of information. So that'll be next week, 8 o'clock. Wednesday, July 15th. And Andrew, yes, those are available for lifetime members only. So lifetime members have access to all of our success webinars. Do you want to do the psychology webinars, Mike? I'm busy talking on mute. Sorry. So yeah, we're getting great uptake on the podcast. A lot of viewership, a lot of people listening to them. So it's fantastic. You can find them anywhere you get your podcast. Typically, look for Talk with Traders. I just recorded one yesterday. Was it yesterday? Either yesterday or Monday. I can't even remember now. But with Dr. Katz, that'll be released on Tuesday. So look forward to a new one, and we release them every 2 weeks. So keep going back, and you'll find new content and material. They're always great conversations. It's a great way to sort of share knowledge and get different people's perspectives. So join us for our podcasts.
So thank you for everybody out there on YouTube for joining us. Don't forget to